In this week's analysis, we'll be taking a look at future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So we'll start with the gold chart on the 1 hour time frame. And if you take a broader look at the markets, we've been in a solid bullish trend, and we've been tracking this trend all the way from this low since we broke out from this massive consolidation over here, right? So right now we'll be focusing on what's happening over here, being day traders, so we can spot out trade opportunities for the week ahead. Right now, if you zoom in, right, this gives us some sort of a symmetrical triangle with price creating higher lows and a clear area of resistance. Excuse me. So right now, to go long, it's pretty straightforward. As you can see from the chart, I'm going to be waiting for some sort of breakout from this area of resistance, maybe a retest, then for me to go higher. And I'll be aiming for approximately 500 to 1000 pips profit, as the case may be. So that's the first bullish case scenario. Second case scenario would be waiting for some sort of pullback. So a pullback, maybe a small pop deeper into the area of resistance, then a pullback into this triangle, the range, then followed by another move to the upside and a proper breakout. So if this happens, then this would be the most this would be the best opportunity, right, to go long, because it gives you a clear area of price where you have to place a stop loss. So if this happens, entry is going to be immediately after the breakout. Stop loss can be placed directly underneath the consolidation that leads to the breakout, while you trade your positions as we go higher, because this will put price in price discovery, right? You put gold in price discovery. That's just briefly for gold. Another reason why I'm tracking this trend like this is because if you go down to the 30 minutes time frame and pull up our moving averages, so 200 EMA, 200 SMA on the 30 minutes time frame, you can see that we've been tracking this movement all the way from these lows, right? So over here we had good bounces, refuses to break, and you can see when we took out this trend line, so area of resistance, in this case we had a massive move to the upside, right? So likewise, similarly, I think we are going to experience the same thing here. So the reason why I'm going to anticipate a move to the downside is because I think we may or may not, we may get another pullback into this moving average on the 30 minutes time frame. If that happens, then if you want a better tighter risk to reward ratio, then a move into this moving average by Monday, Tuesday, or Wednesday, as the case may be, could give you a good opportunity to go long, right? So if you go long there, entry could be immediately after the bounce, so which will place your entry around these price levels, and your stop loss can be placed underneath the moving average or this trend line. So this gives you an even tighter stop loss with a wider area of a wider range for take profit. So you could take out some profit when we get back to the resistance level, and maybe enter another position when we properly break out from this area of resistance. So this is what I'm watching out for right now on gold. I don't really think it is logical to consider the possibility of going short. Well, it's always good to consider the opposite direction, but even if we do break out from this trend line, I wouldn't be going short, right? The reason is because on the 1 hour time frame, so if you go down to the 1 hour time frame, you can see the 1 hour time frame moving average is also tracking the price quite closely, right? So there's a good chance we maybe come down, we take out the moving average on the 30 minutes time frame, then we move a little downwards. This moving averages on the 1 hour time frame may just be there to hold price to go higher. So that's the reason why I wouldn't be going short, even if we take out this trend line, right? Because the moving average on the 1 hour time frame is also there to act as an area of support to prevent us from falling lower. So the only scenario where I seriously start to consider going short would be if we do take out the the moving averages on the 1 hour time frame. So if we get something like this, let's say we fail to break out from this area of resistance, and we get something like this, consolidation on top of this moving average, and followed by a good breakout, then I will start to consider going short on gold. So the reason is because if you look all the way back to these lows, right before we broke out from this massive consolidation, we haven't closed below the moving average on the 1 hour time frame. So I do think the 1 hour time frame is a very solid area of value because it tracks the average price for everyone on this gold bullish move on gold right now. And if we do take out this moving average on the 1 hour time frame, then that may be a reason to get cautious, start looking for opportunities to go long till we at least find a good area of support, which when that happens, we're going to review the chart once more and find good trade opportunities for that specific scenario. But for now, I'm going to stick to my bullish thesis because there's no reason to go short for now, since we stay trading and trailing this moving average on the 30 minutes time frame and this trend line quite nicely, giving us a room for better consolidation and proper breakouts to go higher. So ideally, for patterns like this, to set clear take profit target would be taking the highs, right, the height of the overall chart pattern, which is in this case is an ascending triangle, and you take that as a measurement from the breakout. So if you do that, this puts the price of gold at around approximately $4,000 per ounce of gold. So this probably going to be the target I'm watching out for on gold right now. So if this happens, we get a good breakout from this pattern right now, I do think we're going all the way higher, up to $4,000 per ounce of gold, which I believe is going to be a psychological price levels and an area of value, right? A price level to be cautious, because we may get significant sell-off from these price levels or not. We may go as high as $5,000, this case may be. But as long as the trend remains intact, we trade as the price action evolves, and if we get signals to go short, we do that. But for now, trend is still bullish. We get bullish chart patterns and we get confirmations of those breakouts, we go long. That's briefly for this week's analysis on gold. Moving on, we're talking about crude oil. So crude oil, briefly, we had two rejections of this area of value. We had a good area of support, and now we've taken out this area of support. And for us, there's still another area of support over here, which may prevent price from falling sharply to the downside, as you would expect. But I don't think this is going to hold for long, because we've taken out this area of value. Now, the only reason I'm going to go long, or consider going long, or consider the possible end of this bearish move to the downside, is if we take out this trend line. So this is a 2 hours time frame, mind you. If we do get a bounce, right now we're bouncing off of that area of value. If we do get maybe a move to the downside followed by another move to the upside, consolidation, and then a breakout from this trend line, so this one here, this could be a confirmation of a reversal, right? So not until this trend line is broken, I'm not going to go long or consider going long, because there's a good chance price just gallops itself around this price level, touches this place, and dumps like a rock. So very possible, because the trend is still bearish. We just took out a significant area of value. We're currently trading around another one. That's probably the reason why we're having a consolidation over here. So not at least until we take out this trend line here, I wouldn't be going long. So for a bearish case scenario, going down to the 1 hour time frame, you want to see some sort of confirmation of a bearish continuation, which is exactly what we can see right now on this chart. So for me, I would expect us to get more consolidation, because gold can be tricky to trade sometimes. Maybe a pullback to the upside when market opens, something like this, then a good breakout to the downside. So if this happens, then you want to go short when we take out our trend line or the area of value. Stop loss can be placed above these highs or above these highs, as the case may be. So if the stop loss is being placed in a position where your trade is invalidated, if we take out this trend line, that will be a very good point to set your stop loss, and your take profit target could be as low as these lows over here, right? It could be as low as this one. First take profit target could be as low as this price level. Second one could be as low as this price level, as the case may be. So that only happens if we get a proper consolidation and a confirmation of a bearish continuation. And if this happens, you could go short, place a stop loss here, and ride the trade as we go lower, because this is clearly a bearish trend. So the only reason why I would consider going long is if we get something like this. So just to reiterate once more, so if we get something like this, let's say a move, a consolidation like this, right, followed by a breakout from this trend line, right, this could convince me that this area of value over here might be a very solid area of value for a price reversal. Mind you, something else to support that thesis will be watching out for this bullish divergence, right? We have a bullish divergence here, price creating lower lows with RSI creating higher lows. So you can see the RSI higher lows over here, but the price lower low. So this is a confirmation of a bullish divergence, right? But this consolidation over here could already fulfill the bullish divergence, because you can see the RSI has moved a bit up, bounced off of this oversold level, right? So this consolidation over here could already validate our bullish divergence, which means there's no need for us to go up as high as this area of resistance. So the only reason why I think we'll go there is if we take out this trend line. So get this consolidation and break out from this wedge, because right now we have a falling wedge, and this wedge could continue to fall, right? And this could continue to give us that signal of a bullish divergence, right? But the main confirmation will come if we take out this trend line, guarding the resistance level of the falling wedge. That's it briefly for crude oil. Moving on, we're talking about Nasdaq really quick. So Nasdaq on a bullish tier as well. We day traders, we take it one day at a time. And right now, it's all about probabilities and area of bounce to get the best trade opportunities. So for me, I would go long, right? So my first long trade positions would be placed immediately we come into this area of value. So if we bounce off of this area of value on the 2 hours time frame, I'm going to go long immediately, aiming for higher price targets, right? Because this will give me a tighter risk to reward ratio. So if I go long here, my stop loss can be placed 100 pips below that price level, where I aim for 500 to 1000 pips, targets to the upside, right? So this is my base case scenario for Nasdaq, as the case may be, if we do see price returning into this area value on the 2 hours time frame. So this area value is the 200 EMA and the 200 SMA on the 2 hours time frame, right? So since we broke out from this consolidation over here, we've had one bounce off that area value. Right now, if we do get into that area value again, I do think there's a good chance we also bounce off of that moving average, aiming for higher price target, not until at least we get a breakout from that level. So it's all about probability, risk to reward ratio, the best possible price levels to go long since we're bullish. So if this doesn't hold on the 2 hours time frame, then the next logical price level. So if something like this happens, so let's say we come into this area of value and we consolidate and get a bearish breakout, for example, then this area of value over here would be my next possible level to look for opportunities to go long, right? And that will mean an alignment with the moving averages on the 6 hours time frame, right? So right now the moving averages are still a little bit far away from this area of value, but I do think if we intend to go lower, by the time we get all the way down to this price level, the moving average would have crept up to support that bounce, right? So the reason why this is going to be a significant area of value is because going back all the way to, I think, April, right? So to April this year, so about 6 months ago, we haven't closed below the moving averages on the 6 hours time frame. So right, we've been trading above it, and we had a very good bounce here, which led to another massive move to the upside. And I do think if we are fortunate enough to see price come into this area of value and it coincides with these highs, that could be an excellent level to load up on some heavy positions, aiming for higher price targets. So that's my two base case for Nasdaq. And if we lose the moving average on the 6 hours time frame, then I'm going to start considering going short, because this will technically invalidate our setup based off of the average price dating back to April of 2025, right? So this is how I track trend, and this is what I follow. It's all about probabilities and all about getting the best trade positions in the direction of the trend. So the best trade position in this bullish trend right now would be around this price level, but there's no guarantee I will get there. That's why I'm watching at 2 hours time frame to capitalize on a bounce if we do tap into this moving average, because these indices like Nasdaq, S&P 500, US 30, which is the Dow Jones, they can trend really hard, right? So you don't want to miss that trade opportunity. That's why you go long here, small position, tight stop loss. If it moves in your direction according to the trend, then you're going to make a banger. If it doesn't, then we'll wait for a retest of this area of value, which will likely coincide with moving averages on the 6 hours time frame, right? That's it briefly for Nasdaq. Lastly, we're talking about EUR-USD. So EUR-USD, an interesting one. I've been following this for quite some time, and we seem to be trading within a rising wedge, right? So we have 1, 2, 3. So 3 good bounces off of this lower bounds of the wedge, which is the support level, and now we have 2 bounces of the resistance level of the wedge, which is the resistance level as just mentioned. And if you take a closer look at the current price action, mind you, this is a 2 hours time frame. I'm using the 2 hours time frame so this chart can fit my screen. So if you take a closer look, you can see 1, 2, 3 bounces, and now possibly a sweep of these lows, the support level of the rising wedge, right? So I do think we're going to go higher. So a move to the upside like this, hitting the higher bounds of the trend, possibly a good consolidation for a good breakout to the upside or a reversal to the downside. But for now, this is the exact price level where you want to look at going long, right? If you use a good risk management, then you want to go long at possibly current price levels, and stop loss should be placed underneath these lows, right? So this will give you a risk to reward ratio of SL of approximately 60 to 70 pips and a take profit of approximately 200 pips as the case may be. So this is the risk to reward ratio of 1 to 3, which is decent in my opinion for EUR-USD. And if you're trading this, trade with good risk management. Possibly you could wait to see if price dumps a little backward to give you a tighter risk to reward ratio, followed by a bounce to the upside. So if this happens, you could easily go long here and still retain your initial SL, which will even make your stop loss get, smaller or tighter, right? So that's it briefly for this week's analysis. We just talked about gold, crude oil, Nasdaq, and EUR-USD. If you agree with me, please leave your thoughts in the comment section down below. And if you do disagree with me, also leave your thoughts in the comment section down below. We could learn from one another. That's it from me this week, guys. See you next week.